No,
Can you see my screen?
No, I still see my screen here. Oh, yeah, I still see my screen and I see you on the side. But
So,
there's
so
the only screen.
you can't see.
Huh?
You say you can't see my screen?
No, I can't. I only see
Oh.
you on your cam.
Okay.
Just try again, please.
Okay, no problem.
Because I enabled everyone to share their screen now.
You still can't see?
Nope. I still have my own screen here. No, it's still mine.
No, then I don't know what's the problem.
I'm using my phone, so I may not be able to do that.
Okay.
I'm trying to see if I can use my laptop.
Okay, yeah. Do try, Shika. See, the only thing I have here is my screen still.
Okay, maybe if you can just okay, it's fine because we're having a challenge. Maybe if you can just go on a daily time frame on your charts.
Okay, daily time frame. I am on a daily time frame now.
And then maybe zoom out a bit.
Zoom out.
Okay.
Is it clear?
Yes, but if you can just zoom out
again
one more time, yeah.
Yeah.
Okay. So, all right, I can
see your screen. I can see.
Okay.
I'm seeing your face. I'm seeing your face.
No, I just wanted to. So for looking at the chart,
yeah,
I don't know if I stand to be corrected. It's still an uptrend from a daily time frame.
It is a downtrend on a daily
Oh,
time frame.
It's a downtrend.
Yeah.
Okay, can you just zoom in once?
Chicken, there's noise where you are. There's some noise in the background. It's disturbing. It's disturbing, please. Okay, yeah, see ya. I'm with you.
So if you start from the left hand side, you've got the high there.
You mean here?
No, the first, the far end. Yes.
Yeah. Okay. Yeah.
So that would be your high, and then you've got a low.
This will be our high. Okay. Let me do this. Let me do this. This will be our high, right? Yeah.
So basically, that's where the markets that's the highest the market went to before it went down. Eh?
Yes. This is the high, and then we have a low. Yeah. Yeah.
And then we've got we've got a high that failed to break the previous high.
This one
higher
here.
low.
It is not a higher low because this high is not coming from a lower low. Therefore, it is not a higher low. It is just a normal high.
Did you put another?
Okay. So in terms of
okay, let's entertain Shike just for a moment. You were saying something about the screen, Shike?
Yeah, I'm not seeing the screen. Like, I can't see what you guys are doing. Whose screen are we looking at right now?
It's mine.
can't see. I'm seeing your picture. I'm not seeing your screen.
But can you see my screen?
Yes, sir.
Then please.
Okay, I can see it now. I can see it now.
Oh. Okay, thanks. Can we continue now? Chike,
All right.
are you okay
I think
now with the screen share?
Yes, I can hear you. Go on.
Okay, sure. Okay,
Yeah.
maybe I think we can maybe Chike can mute for the sake of noise, background noise, so we can
there's
hear each other.
No,
well and clear.
the noise is not from my phone, but I'm going to mute anyway. Go ahead and mute.
Okay. So from where the market started to the low and it went high, our first order block would be there on that high where your mouse is right now.
Yeah.
So would you draw? Would that be a valid order block?
And then this will be our. Okay, there's something I want to show you, but let me be in your hands now. Then you tell me what you see. Then there's something I want to show you right in this chart on this time frame. Yeah. So remember that video on YouTube of trading with the trend?
Yes.
Remember that?
Yeah.
Okay. When we go to that video of which we cannot go into it now. It is dangerous to start analyzing our chart from this high here and not looking on the left. Did it break any structure or what?
Okay.
And then what do I mean? Does this come from a high or is from the low, then going high and then it pushed down again? We don't know that if we look at the chart as it is. Hence, we have to go a little bit on the left, just once. And then we will find that we have a break of market structure right here.
Okay.
And then this is then where we have to apply the method of trading with the trend. As you can see, the structure is broken on a bullish bias.
Yes.
Okay, and then when this last bearish candle here it's violated here, and then again we have to look on the far left again and find out what's below this candle. Why do we have this rejection here? That is what we have to do. And then again, if things are like this, and then we now then have this low. Okay, this low will now be here. This is a low, this is a high, right? Is it we want to we want to find an order block? We want to take an entry based on this bearish move, right?
Yes.
So this will be our low, this will be our high. Therefore here, because this low traded below the previous low, therefore this will be our lower low here. Let's
Where is your lower low now?
make it lower low. It's here.
Okay.
It's lower than the previous low. Therefore, it's lower. This is our low here. This is our high. Then this here is our lower low on the bigger picture.
Okay.
That's how it is. So the overall trend is still bearish. Why is it still bearish? Because this high here, this high here, it is not taken out by any move, and it is still there's still a huge opportunity for market to come and mitigate the order block here. And then again, inside this move, what do we see? We see a couple of multiple break of market structures. Number one is here. This is a break of market structure here. This is a minor break of market structure here. And this is a macro break of market structure here. I don't know if you guys understand me.
Sorry, can you repeat that one more?
Okay, this is a macro break of market structure here. It is the overall move that broke this previous low, this move. But prior to the break of market structure, prior to the break of the macro market structure, then we have a multiple break of market structures here, inside here. Then the ones that we can identify on daily time frame, the first one is this here. This is a break of market structure number one here. Remember, this higher and micro, this high and micro break of market structure is the one that gives us the direction of where the market is going. So so this structure broke in a bearish bias. Therefore, we only have to look forward for selling opportunities.
So in that case, where would you put your entry?
That's a good question there. In the event where we have multiple mixed candles that rejected at the peak or at the bottom, we always have to take the last up or last down candle prior to the change of the direction that broke the structure. In the event where we have multiple candles of different directions, we all for a bearish move, we have to take the last up candle. Then for a bullish move, we have to take the last bearish candle. I don't know if it makes sense. You have to understand this in ways before I show you on the picture or on the screen. I mean.
So in other words, you mean for the last bearish or bullish candle, how you would use it as a confirmation on a higher time frame?
It is the one.
Before it's
the last bullish candle is the one that we use as our order block for the bearish move, no matter the time frame, as long as we have multiple candles of different direction in the same move.
All right.
Like in this instance here, we have this bullish candle, 1, 2, 3 bullish candles, right? And then we have one small bearish candle here, right?
Okay.
And that's it. And then we have again we have a bullish candle here. And then we always say we've been told by some people, or we know that the last opposite candle prior to the direction, or the last bearish candle, of which in this instance is this one here. Oops, what's happening here? Okay. The last bullish candle in a bearish move that broke the structure, we used that one as an order block. That's what we've been told, right?
Mm.
Yeah, so, but here, let's say we take this candle here, the last bullish candle, as our order block here. And then look how price traded above it. And with two full bullish candle, and remember we're on D1, so no matter how big your account was, and then you'll have been taken out here. Therefore, we have to come to this last up candle here prior to the change of direction that broke the structure. This candle is our order block here. It's our bearish order block here. Hence, we see price came to trade to trade into it. It mitigated it, and then it pushed further down. After price moved down, and then we have confirmation that now price is bearish. Number one, we have a failure of market structure right here. This is a failure market structure here, and then at the failure market structure, what do we do then? There's always an order block in each and every change of direction. Always. There's always an order block whenever the direction changes and take out the previous low or the previous high. So this candle here was supposed to be our bullish order block here. Had this move came above this previous candle here, therefore this last bearish candle was supposed to be a bullish order block. But this move, as we can see, it did not trade above the previous side. Therefore, this is not our bullish order block. Then we had to let price trade below this move to we had to let price break this structure here. And then what do we do with things like this? If things are like that, the last bullish candle prior to the move down that broke the structure is this one. Yeah. And we can see again that price did not come here. We have again another failure of market structure here. In the meantime, before this failure of market structure, what do we see? We see another break of market structure. After the macro break of market structure, there's a structure that was formed prior to the break, after the break of market structure. So after the macro break of market structure. What do I mean? This move down from here, it broke the structure here, right? Are you there?
Yes, yes.
Okay. This move from here, it broke the structure here, then it rejected it. Then after it rejected, and then we have to investigate on the left what's happening there. But that we only do it if we want to take trades immediately here. But since price already rejected it, it is useless to look on the left because now we don't want to use these candles. So we have this move down and then this move up again, and as you can see, it broke this structure. It got broken. Yeah. Now here's the tricky part. Then please listen very attentively here. We have a structure broken in an uptrend, but the overall structure I said is bearish, and the rules of break of the rules of price action, we know that we follow the price. We then the rules of the break of market structures will always trade on the direction where the structure has been broken into. In this instance, the overall structure is bearish, right? But this structure here was broken in a bullish direction. What then do we do? How do we mix it? In your understanding, sir?
So you say the rules are usually we always trade um,
In the direction of where the structure is broken
of
into.
is broken into, but in this case the overall structure is a downtrend. If since we're on a one daily time frame,
Yeah, exactly. The overall
so
trend is bearish, but this structure is broken on the opposite direction.
I think in my case, since we've got our first main order block on our first high, I would probably wait. I'd let the market go retest that area, and it'll give
Which
me a
area?
better
Up here.
yes, just for a better direction. I'd wait for a retest then see what happens. If we go continuing down or we're breaking the structure above, and then I can maybe take a sell if we continuing down. If structure is broken, I could look for buys. That would be a change of structure from my understanding.
You know, this move is very, very, very tricky. And it used to confuse me at first, and I'll take some trades and I'll lose money. So I'll be angry. I'll be angry at myself. I'll say, but this structure broken. I'm taking a trade. I'm taking a trade now here in the direction of the structure where it's broken, but I'm losing here. So the secret about this move, and I hear you. Your point is very valid. I hear you. Here's the secret now about this thing. Nah? Remember the overall move is bearish, right?
Yes.
And then we have this structure that is broken in a bullish move. This is what we do. We're on a daily time frame now. We will come to this here and take a trade here. But now let me show you what we do. It's either daily time frame or weekly or H4 or even M1. This is what we wait for. Our overall structure is bearish, right? In this instance here, we highlight this last down candle here. Okay. Let me delete this one. We highlight this last bearish candle prior to the change of direction that broke the structure. Yeah. We highlight it, and then we even covered this week for the bullish move. Yeah. We cover it, and then we pull our rectangle to here. Instead of us waiting for price to come here and we buy the market up, we have to remember the overall trend. The overall trend is bearish. So in this instance, this is what we do. We wait for price to come and break this structure here. wait for price to violate this was supposed to be a bullish order block, a mitigation order block. But simply because on a bearish move, this mitigation block will now become a bearish breaker. So this is what we anticipate now. We expect price to come down somewhere here. I'm not sure exactly. I'm just putting my arrow here. I'm not saying that price will reject here. We expect price to come from wherever it will reject, come to this breaker block, which was supposed to be a mitigation block, but it's a breaker block because the overall trend is bearish. And then again, instead of buying here, we're going to sell right from this order block down. This is the tricky part of it.
Okay.
I just want to explain everything simple and slow so that